Good morning, traders. It is Wednesday, July 2nd, 2014, 8:01 Chicago time. Trading futures options on futures and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quick rundown of the overnight news. Not much moved the market until US ADP. Early on, UK June PMI construction beat 62.6 versus 59.8 consensus. There's still a shortage of housing. It's a problem that they're having in England. Housing prices are in a bit of a bubble for lack of construction. US June total auto sales beat 16.9 million versus 16.4 million consensus. I have to chuckle when I see that because I'm thinking, well, probably a third of those will have to be sent back for recalls. JP Morgan the CEO of JP Morgan's Jamie Dimon has a curable form of throat cancer. The board's apparently has been looking at other people to provide relief to take his spot, I guess. US ADP employment change came in at 281,000 versus 205,000, previous 179,000. So that came in a lot better than expected, which caused a spike that we'll look at in a minute to 1970 overnight. Looking ahead at 8:45 Central, all-time Central, the ISM New York prior is 55.3. We're expecting ISM New York. That's a low importance number. Medium importance factory orders at 9 o'clock, and then we have 9:30 crude oil expecting negative 2.5 million barrels. Distillates expecting 1 million barrels, and gasoline expecting 500,000 barrels. At 10 o'clock, Fed Chairwoman Yellen lectures at the IMF. And then looking at tomorrow, I want to remind you that tomorrow we have the ECB rate decision at 6:45 Central AM. ECB's Draghi comments at 7:30. We have unemployment in the U.S. at 7:30. Non-farm payrolls, initial claims, trade balance, and then later we have PMI services and so on and so forth. Natural gas. Friday again is a holiday in the U.S. Tomorrow's session is shortened. The futures market is open till 12 or 12:15 depending on the product. Again, all-time Central, and then again on Friday, same thing, open till 12 or 12:15. All pits are closed. Cash is closed on Friday. So let's have a look at the charts and what the market did. There you go. You should be seeing my screen now. So overall, the market opened yesterday in an open rejection reverse, ORR. There's really no drive here. We opened right at the tip of Monday's range. As you can see, we pushed towards into Monday's range, which was swiftly rejected and reversed. And the market went off into new high territory. Remember, the prior high was 1960. I think it was put in on the 24th of June. The opening swing is 56.25 to 59.5, so from there to there. And the market never really looked back at the open as we would expect with an open rejection reverse. Unable to get into Friday's range and found buyers early on and started to push higher, achieved the measured move targets of 67.25 right here. It went to 67.5 for 2.25 point pullback, and then it proceeded to continue higher towards 68.75, which was the next measured move. I had two measured moves in this area here as primary targets, as discussed in yesterday's Trader Bite. I expect the market to be somewhat overextended here, as it will be reflected in my primary hypothesis. I expect the market to rest. Okay, next target's up, 79, right up here. 1979 is a double measured move target, and then 2050 way up here is the next target up that I have based on measured move. It's yesterday's auction was not a runaway trend. It was an orderly auction, so I put significance on the high volume nodes here. It was a very orderly new high pullback, new high pullback, shallow pullback here, but then it took care of it later on. This is an orderly trend up. This was not an open drive. The NQ had an open drive and it looked like this. See, this is an open drive where it just does not double back on itself, moves away from VWAP, mid, and just rushes up, and that's an incomplete auction. And the market generally tends to come back and test that structure, much like we did, wrong chart, like we did for the Fed LVN zone. See this LVN zone here? We pretty much thoroughly came back to test it down to 36.25. The LVN zone goes down to 37. See this Fed day here? Fed day push, no rotations. The market came back and checked it to find a base and continue higher. Yesterday's is not like that. Yesterday was an orderly auction. It did rotate on itself, as you can see, rotated down on moves up, and then later on it tested the 1965 area on the close, and that's where it closed. And that's really important to note. Market firmly accepting higher prices. It moved up and it shifted the point of control up in an orderly way, and it's accepting higher prices. Higher point of control to prior days. Higher point of control, higher value area, higher high, higher low. So price action and value confirming the trend. It's a normal variation day with a close and high volume area. So again, prices are being accepted up here. I want to point out again that we're doing this on very little delta. Here's the delta here. As you can see, prices shifting up in this trend here that I have channel. Price is shifting higher, but the delta is just not with us. Okay, the delta is just kind of sideways to down, pretty much flat through this whole region. It's something been going on now since November of last year. Interesting to see when that'll break. Overnight session, not much to glean here. Very little price discovery, very tight. Basically, the overnight session was about 2.5 points until ADP came out. You can see the spike to 70, swiftly rejected, markets moving down. Actually, when I wrote my hypothesis, this is what I expected, and it looks like it's playing out already, and they have 20 minutes to the open, which kind of stinks. But you could see that the taper here, less and less prices, less and less volume as prices went up. So the market rejected that 1970 quite swiftly. Highly compressed profile with tight price action until the ADP release. Weak low overnight. The overnight low is fairly weak at 65.25, 65.50. With the high being rejected, the probabilities the overnight low will get taken out to fulfill the overnight stat. Okay, volume's very low as it has been, about half of where it needs to be, 115,000 contracts in the overnight session. Okay, I'm going to go over the key areas here. I'll show you my notes for a minute. Here are the key levels above. I did cover 1979 measured move target. There's 2000.50 above there. We hit the measured move target of 67.50 to 68, so I can cross that out. Minor resistance was hit yesterday. I can cross that out. And then below us, we still have these composite levels. These are the areas I expect to be tested below as we push lower. Okay? My primary hypothesis, market likely to open around overnight VPOC and then thicker part of yesterday's value. So overnight VPOC 60.67 I expected it to open between 67.25, 65.75 in that area. Expecting an open auction in range. I expect that the market has accepted these prices here from yesterday, so open auction in range is expected. Early test of the overnight low. As I said, I'm expecting the overnight low to be taken out fairly early, and we saw here in the we saw this in the overnight chart that it's kind of heading for it already, unfortunately. To continue, expecting a choppy back and forth trade early on. Remember, we have a number at 9, Yellen at 10. Good potential for test of 1916 to late morning, expecting inside day with slight downward skew. So I'm looking downward today as a primary hypothesis. It has kind of started already, but I can see it go down to 1960 today. That's the potential target if hypothesis 1 plays out. The second hypothesis, choppy open to test the overnight low early to 1964, so to yesterday's mid and LVN here, the first real stop, mid, IB, and LVN, 1964, before finding buyers back up to 1970 ADP high. So those are my expectations for today. As far as headline, potential additional risk, again, you got to keep an eye on Iraq. They're forming a state, ISIS is forming a state there, and I expect that there's going to be a reaction from the West to prevent that. They're building an Islamic state and are asking immigrants to come live there, even though they've just seized the territory. Closing reminder, it is a shortened week, and it's not the type of week you want to put too much of your account at risk for. As always, unless you put risk first, unless you really are clear about how you feel while you trade and have a risk plan in place to stop you, that you're disciplined enough to execute. It's there to stop you from just kind of throwing away a good portion of your account. It's a shortened week. Today it's likely to get choppy early. Tomorrow we're going to get ADP. It's likely to be a flashbang kind of type of action, and then expecting a tight range and then nothing. The session is going to close early, so there's very little to do to redeem any large losses. I saw yesterday through stage 5, as I watched risk for our traders, I saw that there are several who are giving away a good portion of their account, and it pains me to see that. It is not the type of week you want to take that large a risk. The volatility is not there. The markets is generally in a choppy trend, and it's important to just stay on top of how you feel and follow your plan. Most of all, just stop when you've hit your risk limits. Stop. That way you can come back and fight another day without having tremendous damage to overcome and a big ding to your confidence to repair before you get back to producing what you were producing. I'll leave you with that thought. Good luck, and I'll catch you tomorrow.